I wish to consider one sum on partnership admission. Look at the sum on the screen. I read the sum for you. Atman and Karman are partners of a partnership firm sharing profits and losses in the ratio of 4:1. The balance sheet of the firm as on 31st in 2014 is as under. Balance sheet as on 31st of March 2014. Asset side: land and building, furniture, investment. Stock, debtors as bad debt reserve, bills receivable and cash balance. Liability side: capital account of Atman and Karman, current capital account of Atman and Karman. Workman accident compensation fund 5,000, creditors 4,000, outstanding expenses 1,000. On the date of balance sheet, they admitted Sejal as a new partner on the following terms. Sejal should bring rupees 20,000 towards her capital and fair 5,000 towards her 1/4 share in goodwill. Half of the goodwill will be withdrawn by old partners immediately. Land and building to be appreciated by 10%. Furniture and stock is to be reduced by 5%. Disclose investment at a market value of 40,000. It should not be any disclose. Provide 10% bad debt reserve on debtors. Outstanding salary 500 to be recorded in the books. The claim up to 2,000 towards workman accident compensation fund is admitted but yet not recorded. This is an important point. Workman compensation fund is 5,000. So profit appropriated to compensate the workers in the instance of accident is known as workman compensation fund. So the profit appropriated for such purpose is 5,000. Against this appropriated profit, the claim or the liability exists to the extent of 2,000. So out of this 5,000, 2,000 is the liability that will appear in the balance sheet as liability. And remaining 3,000, 5,000 minus 2,000, 3,000 is an undistributed profit. And that undistributed profit will be distributed between Atman and Karman in their old profit sharing ratio, that is 4:1. So once again, total compensation fund 5,000, liability there against 2,000. So 3,000 is a fund which is not a liability but just an appropriation of profit. It will be distributed amongst old partners in the ratio of their profit sharing, that is 4:1. This is an important point. From the above information, prepare necessary accounts and balance sheet after the admission of a new partner. So we are required to prepare necessary accounts and balance sheet after admission. We are not supposed to write down the journal entries. Now let me start with the sum. Profit and loss adjustment account, cash and bank account, partners current account, capital account, balance sheet as on 31st 2014, land and building to be appreciated by 10%, land and building is 40,000. Book value is 40,000, appreciated by 10%, so 10% increase, 4,000 increase, 44,000 is the value to be reported in the balance sheet. Look at it. Book value 40,000, 10% appreciated, 44,000. On asset side, I write 40,000 in the inner column, plus increase 4,000. This being a gain credited to profit and loss adjustment account. So profit and loss adjustment account is credited with 4,000. Next, furniture and stock to be reduced by 5%. Furniture is 30,000. Reduced by 5%, 1,500. So revised value is 28,500, that is to be disclosed in balance sheet. So 30,000 minus 1,500, this being decline in value of stock loss debited to profit and loss adjustment account, the other name is revaluation account. So profit and loss adjustment account is debited for decline in the value of furniture, rupees 1500. Next, stock. Stock is 10,000, 5% decline, new value 9,500. So 10,000 minus 500 decrease, 9,500 will appear in the balance sheet, and decrease in value of stock is a loss, and that loss is debited to profit and loss adjustment account. Next adjustment. Disclose investment at a market value of 40,000, book value is 30,000. So 40,000 minus 30,000, increase in value 10,000, investment 30,000 plus 10,000 increase. Increase in value of investment is again credited to profit and loss adjustment account. Here it should be increase in value, not increasing value, increase in value, 10,000. Provide 10% bad debt reserve on debtors. Debtors are 5,500. 10% bad debt reserve thereon is 550. That is the required bad debt reserve. Now the bad debt reserve required is 550 and the bad debt reserve existing 500. So additional provision required is 50. That is debited to profit and loss adjustment account. So profit and loss adjustment account debit 50 to bad debt reserve account credit 50. That's a journal entry for additional provision for bad debt reserve made. Outstanding salary 500 to be recorded in the books. Salary outstanding is a liability, increase in liability, loss, debited to profit and loss adjustment account, and outstanding salary will appear on the balance sheet liability side. So revaluation profit and loss adjustment account debit to liability. Claim of 2,000 towards workman accident and compensation fund is admitted. So out of this 5,000, as I explained to you, out of 5,000, 2,000 is a liability. So funds required to meet with the liability is 2,000. The additional fund 3,000 that will be distributed amongst old partners, means Atman and Karman, in the ratio of their profit sharing, that is 4:1. Look at it, 5,000 claim committed, which is shown as liability. So workman compensation outstanding claim against workman compensation fund 2,000, and this 3,000 distributed amongst partners in the ratio of 4:1. So 3,000 into 4 by 5, 2,400 is the share of Atman, and 3,000 into 1/5, 600 is the share of Karman. If I want to write down the journal entry for that, workman compensation fund account debit 3,000, to Atman capital account credit 2,400, to Karman capital account credit 600. So here 2,400 and 600 credited to the current capital account. Now this adjustment is over. Next, copy the balance sheet means consider the remaining details in the balance sheet, whereas those assets and liabilities which have not been revalued, and consider the capital balances and cash balance. Look at it. Here I write bills receivable 2,000, cash balance brought forward, fixed capital account of Atman and Karman, current capital account credit balance 8,000 credited to Atman current capital account, 2,000 is a credit balance of Karman current capital account, that is also credited to Karman's capital account. Creditors 4,000 on the liability side, outstanding expenses 1,000, liability side same value as it was before. Now copy the balance sheet is over. Now I want to close this profit and loss adjustment account. Profit or loss on revaluation of assets and liabilities is found out by balancing profit and loss adjustment account. So total of credit side is 14,000 minus 2,550. So 11,450 is the profit. That profit will be distributed in the ratio of 4:1. So Share of Atman is 4/5. So 11,450 into 4/5 into 4 divided by 5. You will get a distributed profit of 9160, and that of carbon 11,450 into 1/5, that will be 2290. This profit, revaluation profit, is to be credited to the partner's capital account. So here, revaluation account or profit and loss adjustment account debit to Atman and current capital account credit 9180 to 290. 9160 and 2290. This has been credited to the partner's current capital account. So 3 steps are over. Consider the revaluation adjustment, copy the balance sheet, third close revaluation account. Now fourth is capital adjustment and goodwill adjustment. So here, new partner brought 20,000 towards capital. Cash account debit to capital account credit. This will be credited to fixed capital account. So cash account debit 20,000 to Sejal's fixed capital account 20,000. So capital brought by a new partner is to be credited to fixed capital account. This is an important consideration. Now, goodwill adjustment. New partner brought 5,000 for goodwill. For 1/4 share in profit, 5,000 is the goodwill brought by the new partner. Whatever the goodwill brought by the new partner, what is the purpose behind such bringing of goodwill? The purpose is, when a new partner is admitted to a partnership firm, new partner is entitled to share not only normal profits of the firm, but also the super profits of the firm. To have a right to share the super profits of the firm, new partner is required to bring something in addition to goodwill, which is also known as premium or goodwill brought by the new partner for 1/4 share in this case. Whatever the goodwill brought by a new partner in this fashion, that should be distributed amongst sacrificing partners in the ratio of sacrifice. Now here, you are not given any specific details for sacrifice made by Atman and Karman in favor of Sejal. You are also not given the new profit sharing ratio. So, it is always understood that the sacrifice has been made by the existing partners in the old profit sharing ratio. So, old profit sharing ratio 4:1 is also the sacrificing ratio in this sum. So, goodwill brought by the new partner will be distributed between Atman and Karman in the ratio of 4:1, which is a sacrificing ratio. And let me distribute it to the old partners. Look at the working. Now 5,000 into 4/5, 4,000 Atman will get. 5,000 into 1/5, 1,000 Karman will get. So here, cash and bank account debit to Atman capital account, cash and bank account debit to Karman capital account. So 5,000 rupees are brought by new partner S, and the amount is credited to the capital account of Atman and Karman in the ratio of sacrifice, that is 4:1. Once again, remember, if you are not given the specific details about the sacrifice made by the partners, and also you are not given the new profit sharing ratio, it is always understood that the sacrifice has been made by the partners in their old profit sharing ratio, and that's why this goodwill is distributed in a sacrificing ratio which is equal to old profit sharing ratio 4:1. Now see, goodwill is distributed. Now I want to close all these accounts. I start with cash account, etc. Oh, one thing. Goodwill withdrawn by old partners immediately. Half the goodwill has been withdrawn. I'm sorry. So, goodwill received by Atman is 4,000 and Karman 1,000. 50% thereof is being withdrawn. So, 2,000 is withdrawn by Atman and 500 is withdrawn by Karman. Atman has withdrawn half of 4,000 means 2,000. Atman is the receiver. Debit the receiver. Atman account debit. Cash goes out. cash account credit. So amount withdrawn by Atman 2000, journal entry for that is Atman capital account debit to cash account. Similarly, Karman share in goodwill is 1000. 50% thereof 500. That is withdrawn by Karman. Karman is a receiver, debit the receiver. Karman account debit 500 to cash and bank account debit 500 because cash goes out. Look at it. Atman capital account, current capital account debit to cash account, Karman capital account debit to cash account. This is how the goodwill withdrawn entry is recorded. Now I want to close these accounts. First of all, I close this fixed capital account, 75,000, 25,000 and 20,000. That will appear in the balance sheet Atman capital, Karman capital and Sejal capital. This is the fixed capital, 1,20,000 reported in the balance sheet. Now I want to close this current capital account. Total of Atman 8,000 plus 2,400 plus 4,000 plus 9,160, 23,560 minus 2,000, so 21,560. That is the current capital of Atman. For Karman, 2 plus 1, 5890. From 5890, 500 is deducted, 5390. This is the current capital of Karman, that is also reported in the balance sheet. After closing the capital balance and reporting in the balance sheet, I would prefer to close down this cash and bank account and let me find out the bank balance. So total of debit side, 28,000 minus 2,500, 25,500 is the cash balance. That will appear in the balance sheet asset side. This is how cash balance is reported on the asset side of balance sheet. After that, I would prefer to tally the balance sheet. So I have a total of liability side and asset side of the balance sheet. Asset side total is 1,54,450 and liability total is also 1,54,450. This is how total of balance sheet agrees. I think you must have followed this sum. Thanks to all of you.